right, buckle up, folks. The Nasdaq just blasted past 20,000.
20,000.
For the first time ever. Like, we're talking.
Yeah, first time ever.
A milestone here. You want to know why December 11th, 2024 is going to be the history books?
Oh, it will be?
Well, we've got that closing report from Market Deep Dive, so let's dive in and see what's got investors doing their victory dance right now.
What's really fascinating is that this isn't just some random number, closing at 20,034.893, a 1.7% jump. That's
Huge.
That's a massive leap in a single day and tells us a lot about where the market thinks things are going.
You don't see records broken every day.
Yeah, you don't.
But it wasn't just a tech party. The S&P 500 climbed too, up 0.8%.
Right.
Ending at 6,084.193. That's showing us broader confidence.
Exactly. It means investors are feeling pretty good about the economy overall, and especially because earlier this week, the S&P was actually dipping.
Dipping.
And then the Dow Jones, it kind of lagged behind just a tiny dip to 44,148.563.
The Dow, always the sensible one at the party. Is that because it's full of those old school companies? Not so much flashy tech.
Yeah, I got it. The Dow's like that friend who sticks to their classic investment strategy,
Yeah.
not swayed by all the latest trends, but the Nasdaq, that's where the action was fueled by all those high-growth tech stocks everybody's betting on.
So, okay, what lit this fire under the market today? Was it that November CPI data everyone was buzzing about?
Yeah, the CPI was definitely a big factor. Remember, this measures inflation, and the numbers came in pretty much as expected, a 2.7% rise year over year.
2.7%?
Yeah, just a hair higher than October's 2.6%.
But hold on, isn't the Fed aiming for 2% inflation?
Yeah, 2%.
So 2.7% still sounds a little high, doesn't it?
True, but here's where it gets interesting. The core CPI, which takes out those jumpy food and energy prices, stayed steady at 3.3% for the fourth month straight.
Okay.
That's what calmed investors down.
So they're thinking, okay, inflation's not going completely bonkers. Maybe the Fed will ease up on those interest rate hikes soon because those hikes make it pricier to borrow money, and that can slow down the whole economy.
Precisely. And you know what? Think about this. Analysts are now saying there's a whopping 98.1% chance the Fed will cut rates by 1/4 percentage point at their next meeting.
Wow.
Yesterday, that prediction was only at 89%.
Talk about a confidence boost. And speaking of confidence, can we talk about tech today?
Oh, yeah.
It was like watching a rocket launch, especially Alphabet, Google's parent company. Hit an all-time high. Shares are up as much as 4.6% at one point. What's fueling that engine?
Well, picture this: Broadcom is teaming up with Apple to develop a special AI chip.
Wow.
And suddenly, everybody's realizing how big AI is about to become. It's not just science fiction anymore.
Right.
It's real money, real investment.
It's like that moment when everyone realizes, oh, AI isn't just robots taking our jobs. It's also making some people a lot of money. But seriously, this AI boom is changing everything.
It's not just hype. It's like a seismic shift
Yeah.
in how our economy works. AI is getting baked into everything from our phones to, well, maybe someday even those robot butlers we're all waiting for. Investors are seeing this and piling into the companies leading the charge.
All right. And while we're on the topic of things going wild, crypto, Bitcoin blasted through that $100,000 ceiling.
Yeah, it did.
Hit about $100,700 per coin.
Per coin.
Ethereum also went on a tear, up almost 7% to around $3,800. Is this just more that good vibe spillover from the rest of the market?
It's all connected, that
Wow.
CPI news, plus the feeling that the Fed might cut rates. It's like a shot of espresso for everyone, including the crypto crowd. People are feeling optimistic. They want to be part of the action.
Our time for a rapid-fire round of some other big movers today. We've got winners and losers, folks, just like in any game.
Right.
First up, Broadcom, ticker symbol AVGO. Up 5%. Not a shocker, right?
No, not at all. That Apple AI chip partnership is making waves. Investors see it as a brilliant move for Broadcom, putting them right in the heart of this AI revolution. But here's a twist. C3.ai, they're another AI company.
Yeah.
But their stock took a 7.2% nosedive after JP Morgan downgraded them.
Ouch, someone's not drinking the AI Kool-Aid. What's the deal there?
Well, JP Morgan's worried that C3.ai's stock price is too high compared to what the company's actually worth right now.
Okay.
It's a good reminder that even in a hot sector, not every company is a guaranteed winner.
Right.
You got to look under the hood before you invest.
Word to the wise, do your homework.
Exactly.
Don't just chase the hype. Speaking of companies facing challenges, Macy's took a hit, down over 4% after they lowered their projections for the whole year. Not a good sign for retail, is it?
It tells us that those old school retailers are still struggling to adapt to the world of online shopping.
Yeah.
Plus, with inflation making everything more expensive, people are being more careful about what they spend.
Yeah.
Tough news for companies like Macy's.
But hey, it's not all doom and gloom.
Mm.
GE Vernova, the energy equipment folks, saw their stock jump over 6%. What's their secret sauce?
They announced a new dividend and a share buyback program. Think of it like giving some love back to their investors.
Okay.
These moves signal that GE Vernova believes in their future and wants to reward folks who believe in them too.
Smart move. And then there's GameStop, the meme stock that refuses to die. They climbed over 9%
Oh, yeah.
after reporting a surprise profit last quarter. Guess those Reddit investors are still holding on tight.
GameStop's wild ride shows just how powerful online communities can be when it comes to moving markets. Even though it's been a roller coaster, they're still grabbing headlines and attracting a certain type of investor.
Yeah. And last but not least, Stitch Fix, the online personal styling service, absolutely skyrocketed today, up a massive 44%.
44%.
That's got to be a record, right?
It's a huge jump. They raised their revenue forecast, which means they're expecting to make even more money than they thought. Clearly, they're doing something right in the world of online fashion, finding a way to stand out and give people what they want.
So we've got tech, soaring AI taking over the world, at least the stock market part of it,
Right.
and a whole lot of investor optimism fueling the fire. But there's always a bigger picture,
Yeah.
right? We can't forget what's happening outside the U.S.
You got to, early in the day, there was some chatter about China potentially devaluing their currency.
Oh,
That sent a ripple through global markets and even made the U.S. dollar stronger. It's seen as a possible countermove to those tariffs the new U.S. administration's been talking about.
the global economy. It's like a giant game of chess with everyone trying to outmaneuver each other.
That's a great way to put it. It's fascinating how interconnected everything is, right? One little move in China can send shockwaves all the way to Wall Street.
Totally. It's like a butterfly flapping its wings in Beijing can cause a hurricane in the Dow Jones, or at least a little gust. But while we're thinking globally, what about Europe? They seem to be in a bit of a holding pattern, waiting to see what their central bank does with interest rates.
Yeah, Europe's definitely watching the U.S. market closely, and their own decisions on interest rates can have a big impact on the global economy.
Okay.
You know, it's like a chain reaction. What happens in one part of the world can trigger a whole series of events everywhere else.
So let's bring it back to those individual companies we were talking about earlier.
Mhm.
Were those stock swings just random blips, or do they actually tell us something bigger about where the market's headed?
Those individual stories, they're like little clues
Yeah.
in a detective novel.
Okay.
They give us insight into the overall market trends and investor sentiment.
Got it.
Take Broadcom, for instance, their partnership with Apple on that AI chip. It's not just about one company's success.
It's a sign of the times.
Right.
Everyone's realizing that AI is the next big thing, and they're scrambling to get a piece of the action.
Exactly. Investors are pouring money into AI companies because they see the potential for massive growth. It's like the early days of the internet, where everyone knew something huge was happening but weren't quite sure how it would all play out.
But then you've got a company like C3.ai, also an AI company,
Yeah.
taking a hit because some analysts are worried they're overvalued.
Mm-hmm.
So is it a case of AI good, but maybe not all AI good?
Yeah, investors are getting smarter about where they put their money.
Uh-huh.
They're not just chasing any company with AI in its name.
Right.
They're looking for companies with a solid track record, a clear plan for the future, and a price that actually reflects what the company's worth.
So even in a hot sector like AI,
Mm-hmm.
you got to be picky, right? Don't just follow the herd. Do your own research. So we've seen a lot of exciting things today. Tech, booming AI, taking center stage, and even some unexpected winners like GameStop and Stitch Fix. But there are also some warning signs, right? We can't ignore those challenges facing traditional retailers like Macy's, or those global uncertainties caused by things like China's currency moves.
That's right. It's important to remember that the market is always changing and there are always risks involved. But that's also what makes it so exciting.
Sure.
It's a constant puzzle. And the more you understand how the pieces fit together, the better your chances of success.
We see the Nasdaq break records, AI stocks going bananas, and even a few surprises along the way. But now for the big question, what does it all mean for you? You're tuned in because you want to understand this stuff. Make smart choices with your money, but it's easy to get lost in all the market mayhem.
Information overload is a real thing. It's like trying to drink from a fire hose sometimes.
It really is.
But that's why we're here to help you cut through the noise and focus on what truly matters.
So no more fire hose, just a nice refreshing glass of market insights. What are the key takeaways, the nuggets of wisdom you want our listeners to walk away with after today's wild ride?
First things first, Diversification. Don't
Diversification.
put all your eggs in one basket. Even if you're super bullish on tech or AI, spread your investments around different sectors, maybe some bonds for stability. Even consider international markets.
So don't go all in on the next hot thing, no matter how tempting it seems. Spread the love, spread the risk. What else should our savvy investor keep in mind?
Stay informed, but don't let the market news cycle consume. Find a few trusted sources, a good financial website, maybe a podcast,
Wink, wink.
even a knowledgeable friend. The key is to get a balanced perspective without getting sucked into the daily panic or euphoria.
A little dose of market news, not a full-blown market obsession.
Yep.
Makes sense. But how do you cut through all the jargon and all the conflicting opinions? Sometimes it feels like everyone's got a different crystal ball.
That's where critical thinking comes in.
Oh, okay.
Don't just blindly follow the crowd or the loudest voice. Ask yourself, what are my financial goals? What's my risk tolerance? Once you know that, you can start filtering information and making decisions that align with your own situation.
It's like having your own personal market GPS guiding you through all the chaos.
Exactly.
But let's talk about this AI explosion for a second. Should everyone be rushing to buy AI stocks right now?
AI is a game changer, no doubt about it.
Right.
But remember, not all AI companies are created equal. Some are going to be winners, some are going to flop. So do your homework.
Okay.
Read up on these companies, understand what they actually do, and look for those with a solid track record and a clear vision for the future.
So it's not just about jumping on the bandwagon, it's about choosing the right bandwagon.
And on that note, a huge thank you to you for joining us on this deep dive into December 11th's market action. We hope you've gained some valuable insights and maybe even a little bit of market zen along the way. And remember, this was just one day in the market. The real journey is understanding the forces at play and using that knowledge to make smart decisions for your financial future.